Be Wealthy and Smart, episode 1208.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why home prices will rise. Now, this is according to Barbara Corcoran, the star of Shark Tank, and a well-known real estate brokerage owner, and I happen to share her thoughts on this topic. I also want to share with you why I think commercial real estate is in a completely different situation, and it's not looking good. But for residential real estate, I'm very, very bullish, very optimistic, mainly because I see interest rates coming down later this year and into next year, which is going to cause a crazy boom in real estate, in my opinion. So let's hear what Barbara Corcoran has to say about it. In a recent Fox Business interview, real estate entrepreneur and Shark Tank star Barbara Corcoran shared her prediction for when home prices will rise, how much she expects them to increase, and more. We're currently experiencing a bottleneck in the real estate market, Corcoran said, but this won't last forever. Sellers don't want to move from their apartment or their home because they don't want to take on higher interest rates, she said. And buyers are too afraid to buy because they're getting less house for the price. So you've got a standoff going on, but things are changing. Corcoran believes that there will be a major swing in the real estate market as soon as interest rates drop. The minute those interest rates come down, all hell's going to break loose and the prices are going to go through the roof, she said. Right now, sellers are staying put, but they're not going to stay put if interest rates go down by 2 points. It's going to be a signal for everybody to come back out and buy like crazy, and the house prices will likely go up by 20%, she said. We could have COVID market all over again. So I want to pause there and say, when I look at trends in interest rates, usually what happens is the Fed raises rates too much, too fast. It takes roughly 12 to 18 months for inflation to come down. We're getting in that window where inflation is, in fact, dramatically reducing. And I do think we are going to see lower inflation, which is going to allow interest rates to come down. I also think the commercial market is in trouble as people aren't going back to the office to work. And that's causing high vacancies. And in major cities like New York and San Francisco, it's going to cause some big problems. But back to residential real estate. The article says, although a recent report found that home prices experienced their first annual decline in 11 years, Corcoran noted that has not been the case everywhere in the U.S. In the coastal areas, prices are going down because houses are just not so affordable, she said. But if you look in the Southwest, prices are going up. You have some cities where prices are rebounding by 20% in 6 months. Another area where prices will continue to rise is South Florida. Home prices in South Florida are still going up, and it's one of the hottest markets, Corcoran said. People love Florida, and people are paying anything. I don't get it. It's not my cup of tea, but it's doing very, very well, she said. And although we are facing a precarious real estate market, Corcoran said we won't see a catastrophic housing market collapse like the one that occurred in 2008, due in large part to the subprime mortgage crisis. People have their hard-earned cash in the market. People aren't over-leveraged, she said. There's really no comparison to now compared to what came before. Corcoran views the residential and commercial real estate markets as separate entities, and so a recovery of one does not mean there will be a recovery in the other. She believes it could be a long time before commercial real estate rebounds. No one has the confidence to buy commercial real estate now, Corcoran said. No one really believes it's going to turn the corner. People are staying home. Our best offices in Midtown Manhattan are 50% occupied, and in most major cities and even secondary cities, we have a 20% vacancy rate. No one wants to take that chance. I don't see that turning around. I think it's going to be a bit of a bloodbath before it gets better. End of article. Well, I have to say I agree 100% with Barbara Corcoran on both of her predictions. Residential real estate is going to be hot due to interest rates declining. That is going to set off a huge buying frenzy and speculation like we haven't seen, well, since the pandemic. But on the commercial side, again, weakness due to people just really change their habits. They don't want to go back to the office. This is a shift in actual reality of how many people are occupying commercial properties. And unfortunately, the vacancy rates are going to be extremely high. So commercial real estate is going to have to go through a very difficult market. They're going to have to figure out what to do with all of that vacant space, whether to retool it for residential apartments or condos or what they can do. But I just don't see that we're going to go back to the way that people were working before. Now, another interesting trend is that about 1/3 of home buyers are paying in cash. And this is a little bit surprising because it's not happening in high-priced markets like California, as you would guess, perhaps. So this article says it's been nearly a decade since the percentage of all cash home purchases was this high, but you may not want to start stocking away savings in hopes of doing the same. Real estate brokerage Redfin found that 33.4% of buyers opted for an all-cash deal in April, the highest that mark has been since 2014. All-cash purchases are making a bigger portion of the home buying pie for one major reason. Elevated mortgage rates are deterring home buyers who take out mortgages more than they're deterring all-cash buyers, the study found. Overall, home sales were down 41% from a year earlier in April. In the metros included in this analysis, compared with a 35% decline for all cash sales. The analysis was based on county records going back to 2011 in the 40 most populous U.S. metropolitan areas. The average 30-year fixed rate for a mortgage as of June 8th is 6.71% according to Freddie Mac, so it's not surprising that buyers who are able to do so would opt to sidestep the historically high rates. But what about a prospective home buyer? In all honesty, it's very unlikely that a first-time homebuyer would be in a scenario where they can pay all cash. Jessica Lautz, National Association of Realtors Deputy Chief Economist and Vice President of Research, told Nexstar. So I think having that expectation really means saving for a lifetime. Lautz added that the typical first-time homebuyer has a down payment of 6 to 7%. They're taking advantage of low down payment programs like VA loans or FHA loans, and entering into home ownership with a smaller down payment, Lautz said, referring to the affordable government-backed mortgage loans. The city where all cash purchases were the most common in April was Cleveland, Ohio. Redfin found, followed by West Palm Beach, Florida, and Baltimore. 3 metros along the West Coast where home prices have soared in recent years saw the least all-cash deals: San Jose, California, Seattle, and Oakland, California, respectively. A home buyer who can afford to pay in all cash is weighing 2 potential paths, said Redfin senior economist Shahayar Bokhari. They can use cash to pay for the home and avoid high monthly interest payments, or take out a loan and pay a high mortgage rate. In that case, they could use the money that would have gone toward an all-cash purchase to invest in other assets that offer bigger returns, which could partly cancel out their high mortgage rate. Baby boomers make up the largest share of those buyers, Lautz said in an April report, with more than half of people aged 58 to 76 paying in all cash. Homeowners have really been the winners in that scenario. They have equity and are able to make a move with paying all cash, Lautz said. Another trend that stood out in the data: single women are the most likely to pay in all cash, Lautz found. Single women can be coming from a past marriage where they are recently widowed or divorced, and so they may be moving actually from a family home into their own property for the first time, and so as they make that purchase, they are more likely to pay all cash and not have to take on a mortgage. Lautz added that in the scenario, a move out of a larger family home could mean a transition into a smaller property. End of article. So very interesting trends in cities that I didn't expect to see, where people are paying all cash to get into their homes. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. share the wealth, and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.